All right, let's talk about the AI gold rush and a pretty serious warning about it from one of Wall Street's most famous thinkers.
So what if I told you that one of the biggest financial risks out there right now has absolutely nothing to do with inflation or interest rates or anything you're seeing on the news? What if the real threat is, well, a mindset? An obsession, really. One that looks almost identical to a fever that swept the country nearly 2 centuries ago.
To really get what's happening in tech today, we actually have to go way, way back, all the way to the California gold rush. Because the lesson from that time, well, it's brutally simple. Picture this. It's the mid-1800s. A whisper of gold in the hills is all it takes to make hundreds of thousands of people just drop everything they're doing. They fled out west, absolutely convinced they're just one lucky strike away from being fabulously wealthy. But the reality? It was harsh. Most of them found nothing. Still, every little rumor of a new gold nugget was enough to send a whole new wave of dreamers charging into the mountains.
But this, right here, is where the real lesson is. See, the people who made the most reliable fortunes, the ones who got seriously rich during the gold rush, they weren't the miners. Nope. They were the folks selling the shovels, the picks, and the pans. Their profit was basically a sure thing, because every single miner, whether they struck gold or went bust, had to buy their tools. All the risk was on the dreamers, but the predictable, steady money, that belonged to the toolmakers, as long as that dream of gold stayed alive.
And that, of course, brings us to today, because right now we are living through a brand new gold rush. Only this time the gold isn't in the ground, it's buried deep inside data centers. And I mean, look at this. The analogy is almost perfect. Today's dreamers, they're the tech companies pouring billions and billions into artificial intelligence. The tools aren't shovels and pickaxes anymore. They're these incredibly specialized computer chips called GPUs. And the one company selling all these digital shovels to practically the entire world, that's NVIDIA. It is sitting at the absolute epicenter of this whole frenzy, selling the one piece of hardware everybody needs.
And the demand for these things is it's insane. NVIDIA literally cannot make them fast enough. We're talking wait lists that are months long, with the biggest companies on Earth desperate to get their hands on more supply. This has shot NVIDIA into the stratosphere with a valuation that recently blasted past $3 trillion. That makes it one of the most valuable companies in the history of the world.
But, and this is a huge but, this whole model has one fatal flaw. What happens when the dream starts to fade? When these companies realize the money they're making from AI doesn't justify the massive expense? What happens if this digital gold turns out to be, well, fool's gold? Because history is crystal clear on this. The shovel business collapses the second the miners stop digging. And this is exactly the warning that's now coming from a guy named Michael Burry. Now, if you're going to understand why his take on NVIDIA matters so much, you first have to understand who he is.
Back in 2005, he did something nobody else had the guts to do. He made a $1 billion bet against the entire American housing market. He went through thousands of pages of mortgage documents, and essentially he bought fire insurance on a house that everyone else thought was fireproof. The entire industry, they thought he was crazy, but he just waited. And then in 2007, the house started to burn. He personally walked away with $100 million, and his investors made over $700 million. And that's why, to this day, when Michael Burry talks, the market gets real quiet and listens. And right now, the man who saw 2008 coming is sounding the alarm again, and he's pointing to 4 major cracks that he sees forming in the foundation of this whole AI boom. The first crack, and this is a big one, is a shocking lack of profit. You have the entire tech industry spending hundreds of billions of dollars on AI. But get this, a recent MIT study found that a staggering 95% of these projects showed no real improvement in profitability. If that keeps up, sooner or later, companies are going to be forced to turn off the fire hose of cash. Crack number 2, the competition is heating up big time. You see, NVIDIA doesn't actually make its own chips, it designs them. And that design, well, it can be challenged. Google, for example, is now training its AI on its own custom-made chips. And that shows you the big threat here. You've got Amazon, Microsoft, and a whole wave of startups all gunning to create their own alternatives. This isn't a stable kingdom anymore. It's quickly becoming a battlefield.
All right, the third crack is where things start to feel a little spooky. We're talking about hidden debt. Morgan Stanley thinks tech companies need to spend $3 trillion by 2028, but they only have enough cash for about half of that. So they're getting creative with their borrowing. Take Meta, for instance. They partnered up to create a totally separate company that then borrowed $27 billion. The result? All that risk is hidden. It's not on their main balance sheet. Does that sound familiar? It should. This is exactly the kind of financial magic trick that got everyone into so much trouble back in 2008. And finally, the fourth crack. This is the one almost no one is talking about yet. Energy. Just pure, raw power. Training these new AI models consumes more electricity than some small countries. The US electrical grid is already strained, and building new power plants takes years. Without stable, abundant power, data centers just can't run. AI development hits a wall, and the demand for NVIDIA's hardware could dry up right along with it. So, when you put all of this together, you have to ask the big question. Is NVIDIA this unstoppable force that everyone thinks it is, or are we just watching a repeat of history? Look, we have been here before. Back in the late 90s, during the dot-com bubble, a company called Cisco was seen as the essential backbone of the internet. It was the NVIDIA of its day. Investors thought its dominance was permanent. It wasn't. Cisco lost 80% of its value when that bubble burst. 80%. And Burry is basically asking, why should we think NVIDIA's story will end any differently? So are we actually building the future with this technology? Or are we just building another massive bubble that's destined to pop? Because at the end of the day, whether you're an NVIDIA bull or bear, one thing is clear. The question isn't whether AI is real. Of course it is. The real question, the trillion-dollar question, is whether all the money being poured into it will ever match the incredible promises being made about it. And if the answer is no, then the entire system is headed for a day of reckoning. And when that day comes, the only thing that's going to matter is who prepared for reality and who just kept buying into the dream.